My name's Keith Dean. I am Vice President of Business Banking and Relationship Management for Texas Capital Bank. I oversee small business for North Texas. We have 5 locations, one here in Fort Worth. When I meet a small business client, I always refer them over to the Small Business Development Center. If it's here in Fort Worth, that's Cynthia Harness, been a very good friend of mine for about 15 years. She can help take what's in your head and help you put it on paper so that you can approach a bank or a financial institution or a banker like myself, who will then look at your financials, your balance sheet, your tax returns, your P&L, all of those things. What we do is when we collect that full packet, we run what's called a cash flow statement. And what a cash flow statement is, in layman's terms, how much money you have coming in versus how much you have going out. So for example, if you make $10,000 a month and you have $9,000 in expenses, you're going to be denied because that last $1,000 is not a livable wage. However, if you make $10,000 a month and you have $4,000 coming out, $6,000 left over, the loan can fit into that amount that's left over. You can live off of that for the month and your business can sustain. Now, there are other factors that go into that, but that's mainly what the cash flow statement is there to do, is to make sure that you can repay the loan as well as live and run your business. If you are an individual, when we look at your tax returns, we're going to go down and see if you can go on line 9, add depreciation back. That's a plus for the business owner. And to also look at line 31 to make sure that there are no losses. If there's a negative number on line 31, that shows that you're either writing everything off, which I totally understand because you don't want to pay taxes. However, you have to show that you're making money in order for a lender to loan you anything, because if you're not, that's throwing money down the drain, which that's the way the banks look at that. The business debt schedule is a document that's used to determine what bills you have, how much the monthly payments are, and what's going to come out in order to calculate your total project cost. Once you list everything, whether it's going to be money out of your pocket or money from the business, from the debt that you have in the business name, all of that is going to be listed on one document, and at the very bottom of that page, it's going to calculate itself. Add it up, that's called the total project cost. Now we know exactly how much money you're going to need, with the exception of working capital, in order to launch your business or grow your business. I have 4 different ways of lending, and that is geared toward what the different type of businesses that you have. So, for example, I have a CDFI, which is a community development financial institution. I used to work at one, and I was recruited from one to come and help at Texas Capital with Lendistry. That's the largest minority-owned CDFI in the country. We funded them $5 million 2 years ago to come to Texas. They help us with our businesses that are 0 to 24 months old, because that's a true startup. A true startup cannot go to a bank, a big bank, and acquire funds. It's just not going to happen. So that's why those CDFIs are in place. Secondly, we have CRA dollars. That is Community Reinvestment Act, and that covers low to moderate income, women, veterans, and minorities. Next, we have SBA, and then finally, we have conventional. The notice of intent to apply for joint credit form is simple. It just lets us know how many people are a part of the business and what the percentage of ownership they have. If you have 20 or more % ownership, you are required to be on the loan. If you are less than 20%, it doesn't matter. But that's exactly what that is for, just to let us know who has 20 or more %. If something were to happen to you, who does your business or your business assets go to? That lets us know who's your family or second in command, or basically like your will. Anything that happens to you, we know who else to reach out to on your behalf, because of course you wouldn't be here to take care of that. A certification of beneficial ownership is a simple document that we use to protect you. If something, God forbid, were to happen to you, we would need to know who to reach out to in order to have them be responsible for all of your assets that's tied to your business, so that your family will then be taken care of. So the entity piece of this is basically your signing up with the Secretary of State, getting your EIN, which is your employee identification number, obtaining your tax ID number. That's just so that the state, when it's time for you to file taxes, knows that it's your business and not you personally. EIN is if you're going to hire employees. The tax ID number is going to represent the business entity itself. That's what the government is going to look at. And if you were to use your social, then that's where you're filing your personal taxes. But as we know, when you file your business taxes, you always use your tax ID number. The entity documents that are going to be required are very simple. This is simply you reaching out to the Secretary of State to acquire your EIN, which is your employee identification number, if you're going to hire employees. If you're not and you're running a business yourself, simply just obtain your tax ID number. It's a $300 fee across the board, and that has you set up and certified through the Secretary of State. Those documents then will be turned in with your financial packet, and as long as it is verified with the rest of everything that you turn in, that's when we can start to look forward in the lending process. To provide any additional information, which is one of the last bullet points of the checklist, that is simply telling your story. Because what happens is when you turn in your financial packet to me or any other banker, we become your voice. The underwriters don't know you, they only see black and white. We are the ones that go to that underwriter and actually fight for you. Why does this business need to be funded in order to move forward? And of course, if we don't get you funded, we're not successful. So the more we know about you and become your voice, we are your ally and your partner in hopes of getting you the funding that you need. To become bankable, there's a multitude of things that you need to do. First, you need to look at your finances, your debt. Are your credit cards maxed out? If they are, you need to get everything that you have down to 20%. Why? Because when we pull credit and we look at it, we're looking for a certain score, number one. Number two, as we're looking at each trade line on your credit, we're looking for ones, possibly twos, but if we see threes, we're going to start backing up because that's 30, 60, 90 days. If you have ones across the board, we know you're paying on time, but your balances need to be lower because you're exposing yourself with higher balances because your debt to income is high, and it's going to be even harder to fit a payment in there when you don't have extra income left over to pay the loan. After you get yourself in that particular situation, then that's when we're going to figure out what is going to be the amount that you need in order to get your business going, because a lot of times small businesses will borrow enough and then 3 months later they need more. And so when you get to a particular situation like that, that's why you want to sit down with a banker or someone from the Small Business Development Center that can help put you in a position to ask for the right amount of money. So, I mean, this question can go in 50 different directions. It just needs to be fine-tuned to each individual person. Business credit and personal credit, they are different, however, they do tie into one another in order to help you separate them. So I'll give you an example of what I did. My boss at GM Financial back in 2011 told me to go to Capital One and get a business credit card and sign on behalf of my business, meaning co-sign on behalf of the business because I have no business credit. As long as I don't default on that card, it'll never report on my personal credit. But after 6 months, it will then start to report on DNBI, which is Dun & Bradstreet. Dun & Bradstreet is a credit bureau specifically for businesses, not Equifax, not TransUnion, not Experian. That's personal. Dun & Bradstreet. Once you have a Dun & Bradstreet account, when you go to extend credit in your business name, the companies that you're looking at or the banks that you're reaching out to are going to pull DNB and see if you have that history. The more history you have on Dun & Bradstreet shows that you have more and more credit in your business name. And if you have an LLC, God forbid anything happen, nothing can touch your personal. It just goes towards your business. However, having that credit in Dun & Bradstreet just shows the strength of your business as you've been growing the entire time. So I encourage all businesses, please find some type of credit card or an account that will be linked to help you build Dun & Bradstreet credit for yourself going forward. I have a gentleman named Justin Murch of Creative Credit Solutions. I tell everybody, please call Justin. He's the best at what he does when it comes to credit repair, credit restoration, helping you understand credit. He will help you with mortgage scores if you want to buy a house. He will help you with a car score if you want to buy a car. I mean, it's a multitude of things, but you need to have an expert in that field, and he is my expert. All of my clients I send to him. 3 tips for improving your credit. Number 1, take all of your accounts and get them to a 20% usage. So if you have a $2,000 credit card, bring your balance down to $599 and let it stay, because it's going to report every month. I would use it once a month just to have some activity so that the credit bureaus can read that. Number 2, if you have 8, 9, 10 credit cards like I did when I graduated from college, get rid of all but 2. Lastly, manage them and pay them on time if you don't pay them early. For me, I get an email before the paper statement shows up at my house. I pay it as soon as that email hits my inbox. That means I'm paying a little early, and the creditors do like that, and you will definitely help build your credit that way. And if you have extra money and it's just sitting in an account, you're actually losing money. If you don't need those funds, give them to your banker. Let him put, like, for example, myself, let me put it in a CD, pay you 3.5. Let me put it in a money market, pay you 4.1. But at least your money is earning interest, and you can always access it if you ever need it. That's what you do. I mean, I had a classmate last year. She came to me in November, and it was perfect because from November to June, we ran a special on a CD that was paying 5.55% interest for just 8 months. So in June, when I call her, I'll let her know this CD is about to expire. Here's 3 other products that we have that you can actually move your money into, but she will also see the interest that she's earned. That's what you do with your money. Do not ever let extra money just sit. Find a banker that's knowledgeable, that understands the products and services that are going to be tailored to you in the event that you don't have a business, but you just have extra money and you want it to grow. If you get a line of credit, that's going to be better than a credit card and a loan. Only because the line of credit, you pay interest on the money that you're using, not the full balance. The loan and the credit card, you're paying for everything. When I was growing up in Louisiana as a kid, I went to Grambling State University, and you never saw good quality paraphernalia for an HBCU. I saw Louisiana Tech, I saw UL in Monroe, I saw LSU, Tulane, you name it. All of the PWIs had the best merchandise. So I said, when I grow up, I am going to start an apparel company for HBCUs and use the same merchandise, same quality, and put that on those items and be able to sell them at a discounted amount. And so I met a gentleman in Euless, Texas, where I live, named Michael Scroll. He owns Big Frog. And so Michael took me under his wing. He has heat press machines, he has direct to garment, he has embroidery, he has all of those things. And so I started my business by subcontracting my work. I would get my blank garments and I would take them to him and I would pay him to decorate, and then I would ship it out to my customers. As my business started to grow, I used my profits to buy my own equipment. That's called bootstrapping. That's not what you should do, but a lot of businesses do that. You spend your own money until you get to a certain status when the banks will actually give you money. So that's the way I started it, but I'm actually now, here we are 10 years later, I'm on my 3rd loan through an actual CDFI who's now one of my competitors, but they gave me the capital that I needed, and my repayment ability was my job. So the question that they asked me was, what about your experience? Well, I was able to tell them that I worked with a business owner and ran my own business through his, and then went out and got the capital I needed in order to buy more equipment, build my website, and then move forward. My advice to anyone who wants to start a business is to find someone in that same business and let them mentor you. I mean, just shadow them so you can get a better understanding. Anybody can read a book, anybody can go to Google and YouTube, but hands-on experience where you're there doing the work with someone who already has an established business that you want to get into is going to be the absolute best way to go.